Welcome to Global Financial Engineering. I'm Dr. Glen Brown, and also welcome to another session for the Global G7 Combo Trading Strategy. I want to spare a little time to look at the end of the trading week, 24th of February 2023, what have transpired with the strategy. As you'd have recalled, we started this strategy this week. Somewhat of a risky strategy where we take the 7 major currency pair and apply strategy 2 to 7, which run on the Global Algorithmic Trading System number 1 to 6. Before we head over to the major platform to see how the stimulated accounts have been doing, let's bring back to your attention the risk involved via our risk disclaimer. We have already indicated that for persons who are not able to see clearly the risk warning, then from our main site you can type in risk disclaimer here. When you go to that risk disclaimer, you can pick any one of them. Going to come up and you'll see the complete risk disclaimer. As usual, I will ask you to pause this lecture and read through it. It is 2 pages of risk disclaimer. It's very important for you to go through them. And then we will review a summary of the strategy, and then we go directly over to the trading platform. Okay, so let's move to the final section of it. You do the same and pause. And read down to the CFTC rule 4.41. Okay, so let's go to the final section of it. I want to just zoom into a bit in terms of the CFTC rule 4.41. And the reason for this is that in these lectures, we will make use of hypothetical trades, not that we do back testing without live data feed. We are using live data feed, however, it is done on a simulated account. That means we are simulating a $20 million portfolio. So this lecture, for this lecture, we are using a practice account for 20 million US. And this allows us to utilize the proper risk management rule, proper position sizing, and at the same time being able to navigate and change the system to show the effect of it. So we have enough capital to do a lot of stuff. The CFTC 4.41 is relevant here. Hypothetical or simulated performance result of certain limitations, unlike an actual performance record. Well, it's really an actual performance record in the sense that we are using live data feed, but the issue is that the emotional that attach when you lose real money is absent, okay? So we say simulated results do not present actual live trading with real money, I want to adjust that. Okay. And the trade is executed. Okay, so while the exact phrase of the disclaimer say the trade has not been executed, in our situation the trades are executed. Okay, but we want you to assume all the elements of hypothetical trades. Okay, all right. So first and foremost, let me also say that the objective of this session is strictly for educational purposes and should not be deemed as investment advice or trading advice. Okay, it is 100% educational in nature, and that's why we call these lectures. Okay, now I want to talk to you a bit on the strategy. Okay, so the strategy is a global G7 combo Forex trading strategy. So we're not using this strategy on any other instrument. We are using it strictly on the Forex. And we are using it on the 7 major pairs, namely the Euro USD, USD Japanese, GDP USD, USD Swiss francs, Australia USD, and USD CAD and New Zealand USD. Also, note carefully the risk per trade. We are risking 0.01% per trade. We are using a global trailing stop line of 1 time the daily average true range, but we are using period 7. But there are times, especially like what you have seen happen today, when fundamental economic data drive market into a parabolic move. And as the range expands, then the stop loss will also expand. In order to avoid giving up too much to the market, then we also apply a normal trading of 35 pips, or what they call 350 points. So that's the default, okay? And in this lecture, we are just focusing on the default. There are some limitations with that. There are some drawbacks with that, but I'm not going to go through that now, okay? The idea is that the 1 times the daily ATR would give us a reasonable allowance to say that if price move against us by that 1 ATR, then there is a high probability that a trend change might occur, or there's a high probability that it will move further. And as we try to remain disciplined with risk and to obey the rule of cutting our losses short and at the same time allow any profit to run, we believe that we should get out of the trade for 1 ATR. However, there are times when market conditions change, so market can get very volatile. If you are trading that strategy and you realize that you get chopped up, which means that you have frequent stop out, then it means that the market is too volatile for that risk limit. And in that sense, then we would have moved to our maximum risk framework, where at Global we design that our maximum risk per trading time frame would be 25 times ATR 25. So we would have increased the period from 7 to 25, but we will also take the average true range, that's the ATR, okay, of the trading time frame. So we're going to use a multiplier of 25 times the average true rate. I want to make sure we get this right, okay? What am I saying here? If market condition change and market get volatile, or maybe the liquidity provider start to stop you out, then you would have changed the stop loss along with the trailing to equal to 25 times the average true range of the trading time frame, but we are also using period 25. So for example then, on say system 1 that run on the 5 minutes, you'd have put the average true range indicator on the 5 minutes, put it to period 25. Whatever the result is for the DATR 25, you multiply by 25, and that is what we call the maximum allowable loss in terms of points. Okay, so we call it MAL, maximum allowable loss in terms of points. We'll also trail by that amount as well, and yes, we will put the same trailing of 350 points because we want to capture any parabolic move. Okay, so these lectures are technical lectures, and I must also say that for persons who normally use this medium and expect like a 5, 6, 7 minute video, then really and truly you can forget that. You're not going to find this here. We are serious people. These are lectures, so expect us to have lectures that last up to 2-3 hours. Okay, I'm not saying that this one in particular will last that time, because we're just going to use this to see what is the status of the strategy at the end of the week in order to start next week. Okay, so I just want to clear that up in terms of the maximum allowable loss. The maximum allowable loss for any time frame is to take 25 and multiply by the ATR 25 of that particular time frame. Okay, that is the maximum loss we will take on any particular trade. We will not adjust the percentage risk though. So for example, for strategy 1, we risk 0.01%. Strategy 2, we risk 0.02%. Strategy 3.03% for the conservative. For the aggressive, we can go up to 0.1. Okay, so remember we have the conservative, the moderate. So for example, for the conservative, we'll risk 0.02% normally, with a risk 0.02% on any one of this subsystem, and this is when we are doing conservative. But for the moderate, we're going to multiply the conservative by 10, so with a risk 0.2%. Okay, the aggressive, we will risk, okay, for the aggressive we will go up to 2%, okay, for that. But sometimes we tend not to use this. For small accounts, then you will have to vary that, and we have different risk model where we reduce the number of contract size, we reduce the number of instruments in order to ensure that we don't overtrade. But I want to focus the lecture strictly now on this particular strategy that we program within. We program it within the Global Algorithmic Trading Software. Okay, so what we're going to do now then is to go over to the platform. I'm not going to go through the whole logistic of it, and since some of these strategies are not available in the public domain unless you acquire the software. But it's good for person before acquiring the software to have an idea how the strategy works before you commit any capital to it. So I want to just go over to that platform, and we have denoted the particular account for the to be 2355785, and just to run through how we set this up is the 7 pairs we are using, and these are, if you look to the upper left hand side, you see the Euro, USD, GDP, USD, Japanese, USD, Swiss francs, USD, Canadian, Australia, USD, New Zealand, USD. These are the 7 pairs that we trade for this strategy. But what we would have done is to apply it to System 1 that run on the 5 minutes, System 2 that run on the 15 minutes, System 3 that run on the 30 minutes, System 4 that run on the 1 hour, System 5 that run on the 4 hour, System 6 that run on daily. In that sense, if we would have had 7 instruments on M5, so see we have it here 1, 2, 3, 4, 5, 6, 7. Okay, now the fact that we are going to use 1, 2, 3, 4, 5, 6 subsystems, what this means that at any point in time we could have a maximum open position of 42. Could have 42 open position. Some might ask, okay, why do we risk such a small percentage, 0.01? For this particular strategy, we are using the same risk parameters, the same risk factor for every single system. Now, if you look up to the upper right hand side, you see Global Algorithmic Trading System. That's the software. And this is where we program the particular parameter that we want in it. Now, I also want to say this. This software is not a black box. That's why I call it a software. It is different from most other software that is just a strategy. It is not a strategy. It is a software that you can program many thousands of strategy within it and allow it to trade for you. Okay, so I want to make sure we get that pretty clear. So for example, I have created this particular strategy and I program it into the software. So I am risking 0.01%. My target is 3 times my risk, so I program it here. Also, I want to trail with an hard stop as well of 1 time the daily average range. Now it is 1,440 minutes in a day, so it's why you see the time frame 1,440 minutes daily. Okay, and I'm using period 7 so that it is more sensitive to change in the market action within the week. But apart from using this as a stop loss, I will also use it as a trailing stop. I have the option. I've taken 4 time frame confirmation, but I'm taking 3 time frame confirmation. And yes, I'm also trailing by 35 pips or 350 points. I want to go down to the other stop where we trail by the ATR. There are many other, it's a complex system. There are many other indicators in this, but I'm not going to go through that now. That is not a part of this lecture. This lecture is not to go through the features of the various indicators and different systems that we could program in it. It's just to deal exclusively with the G7, Global G7 combo Forex trading strategy. So the fact that I have all that program, I just add it to each of my chart. Okay, so all of them have the same setting. Okay, so in that sense, then what am I saying? For this, I am risking 0.01% 6 times. So the maximum is 0.06. So in total, I am prepared to have an exposure of 0.06% for each of the currency pair. Okay? And that's why we say we can have 42 positions, risking 0.01. That means my maximum risk at any point in time is 0.42. Hey, that is less than 0.5. And many persons trade with even 2% risk per trade. What we are saying that the entire portfolio will not risk more than 0.42%. Why? Well, we are trading a $20 million account, and the truth is, in fact, the more you have, the less you should risk. So we prefer to go it small and slow. We might have a little bit of a break in connection here. We should have it back soon instead of switching it. But yeah, let me switch it and then we can talk about it. Okay, so we're back now. We can go back to the platform as we had a break in connection. Okay, so I was saying that all the system for this strategy, we are using the same risk management, same parameters right through. Okay, now I want to demonstrate a few things here. The effect of the normal trailing stop. If you look, the normal trailing is this line. We are locking up potential profit. Okay, if I go to the GDP USD, you'll have noticed that of these green lines indicate entry point. We had system 1 executing a short position on GDP right here. It bounced a bit, collapse, bounce, collapse. Our stop loss though, based on the 1 time the daily average through range, is 106 pip or 1063 points. Now for those who are doing manual trading, you will have to compute the lot size, okay, or what they call the contract size. With our software, this is automatically done. Also, we don't need to go here and click new order, buy or sell. The system do it automatically, okay? But it doesn't mean that it is a set and forget, which means you put it on and leave it, because you need to monitor. Software help to remove the boring part of execution. But we need to get those data to analyze them, to optimize the system, to see how you could improve on the structure that you program into the system. Now, if we move to the USD Japanese, you'd have noticed that a buy signal was executed here. Price run up, pull back, run up. But the 35 pip trail is making the trailing right here. So what we are saying here, between here and here, between here and here, the full profit, our potential profit then. But what we are doing here, we are securing this piece, and this is what we would normally call secured unrealized profit. Okay, if the market continues to move, we will trail by 35 pip down the market, either till we hit our profit target or the market reverse and take us out. Same thing for the USD Swiss francs. This was a massive move this morning here. You'd have seen when this PC report comes out in the US session, market just shoot off, and this was really a massive move. You see most of these pairs rallying up to 75 pips or so. So the same thing happened here. This is a situation where our stop loss is now above the entry point. USD CAD, it's out of the money, so to speak, then, because we enter here, which is a buy, and we pull back. Okay. Australia USD, a massive collapse in this pair. We were able to move our stop loss below the entry point. So this is in a better position than break even. Australia, New Zealand USD, similar situation here. A bunch of orders were executed here based on the volatility. So we have 4 orders, 4 short position coming down here with us in our favor, and the stop loss is right here. Now, so these are the 7 pairs and system 1. System 2, which is the 50 minutes, is the same. But as you go up within the time frame, you'll have noticed that you can see more clearly the entry. And the GDP USD is the same here. USD Japanese, again, look at this one. This is a spike. Okay, take out some trade, push it back to the upside here. USD Swiss francs, same situation here happen, but look where we buy. We buy way down here, way down here. This is the classic move of allowing profit to run. See, way down here we rally, rally, rally. This is where the stop is now. So worst case scenario, we pull back, we get stopped out here, and we bank this into our bottom line. The USD CAD, again, similar situation though. We buy here, pull back against us, so we are out of the money. We wait patiently. Okay, Australia USD, wow, this was classic today, coming down, down, down. Now with this software as well, when a trigger or when a buy or sell position occur, in this case a sell, you'll see the candle turn solid red. Okay, so this bright red means that the momentum to the downside is strong. Okay, when you have a dark blood red like this, then it means that we are losing some momentum, but that does not change the trend. You could see what happened here. 3 execution, bam, 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 stop loss right here. Same thing for the New Zealand. Massive amount of order was triggered here by 4 of the system. And now I want to talk about this. While this move in our favor, the same thing could happen and all 4 trade move against us. This is why we say this is a risky strategy. But we balance it by lowering the risk per trade 0.01. So yes, just as how this move in our favor, it could also move against us. There's no holy grail. Okay? We are not saying that all trade, you will never have 100% winning trade. Anybody tell you have 100% winning trade, either the time frame that they're talking about is too short or they are lying. We're going to lose some money. But in the long run, what we aim for is that the magnitude of our winnings will be greater than the magnitude of our loss, and that's what gives us the edge. So here we pull down nicely. This is how we pyramid in the system. Now, we could wait for one system to pass break even, then we add another system. Or we could do similar to what happened in the early days of the Turkish trader, where we add one system after you move by 180. We are not doing this here. We are letting it loose, which means any system can trigger at the same time. So we have 4th system firing off here, nice down here, going a little bit sideways, stop loss here now, but it's below, so these are really profitable trade. And I could go to system 3, that's the 30 minutes, and let me run 2 or 4 of them so we can see them. So if we look at this, you'd also see system number 3, the 30 minutes, and you see the same thing here. There are 2 trades executed. Look at it, nicely down here. Same thing for the GDP. We have a short here, but look, stop loss is here. So we're still not out of the hoods yet with this. We need this to break down by more than 35 pip to move to break even. The USD Japanese enter here. This trade was stopped out by a spike, seemed to be possibly, yeah, it was profitable. Then it put back here, and we rally have nicely. So we got a 183 pip for the day. Really nice trendy day. Same thing happened here for the USD Swiss francs. We enter here, buy, rally, pull back, rally, pull back, rally, pull back. So we have a nice trade. We were able to lock up 35 pips each going right up here, and we are still in the trade. Best situation could happen next week when the market open. We gap to the upside. We gap to the upside, and we have 3 more days of trend. We would have hit the profit target. But we see what happened. USD CAD. We buy, pull back, it's out of the money, stop loss is here. Australia, USD, same thing. 3 position short to the downside, rally down nicely. New Zealand, same thing. 4 position short to the downside, rally down nicely. Stop loss is the trading stop of 35 pips. Then on system 4, which is a 1 hour, nice little bit of a sober here. Saturday a little bit slower, but yes, we're able to lock up some of the profit here. Same thing for the GDP USD. Haven't reached a break even yet. Stop loss right here. And this is adequate based on what we are seeing here. The US Japanese buy, rally off. Okay. US Swiss francs buy from here, rally off. Okay. The US CAD buy, pull back out of the money. Australia USD short out of the money, pull back, get in gear now, and we are down here, stop loss right here. So pretty much have a nice trade. New Zealand USD, same thing. Wow, look at this one. Short, bounce on us, come back down, retest, bounce, break again, and it was really collapsed way down below support 3 here, and our stop loss is here. So we are still in the trade. Again, wow, what could make us happy next week? Gap to the downside. And we are able to trail for a day more or 2. We might be able to hit that 3-to-1 reward risk ratio. Now, not all days going to be like this. There are going to be some days we're going to lose a lot of money. Yeah, there are going to be some days we're going to lose a lot of money. There are some days we could lose 100,000 on that 20 million account. We could lose 200,000 on it. All we are saying is that you should be in it for the long haul. 1 month of trading is nothing. You'll see as we go through these lectures, and those of you who are part of the Global Proprietary Trading course, you'll notice that we believe in data. We are data scientists. We need data to make decisions. And in truth and in fact, we normally don't change nothing much unless we have 500, 5,000 trades, okay? A 30 trade, 50 trade have nothing to do with any form of statistical confidence here. That is just like noise, okay? So that we need a bigger sample in order to make strategic decision whether we change the system. So we use the default, and then later we can change. I show you the condition that we could change here. If we get infrequent stop out like this, stop out, then you could go 25 ATR. So it could be the ATR of the 1 hour, 25 times that, and we still trail by 35. Still trail by the 35 pips. Let's look on system 5, which is now on the 4-hour chart, and this is going to give you less trade. Okay, so as you move up in the time frame, you're going to have some symbol that doesn't even give you a trade, okay? Because it takes a longer time for these trades to work out. But if you look on the New Zealand USD and this 4-hour chart, you'll have seen that we shot nicely and pulled back, okay? And we have system 6 as well. This though we normally don't have much until the market starts to trend properly. Let's look on the status before we close, so we could see here what we could do. If you want to see what was the result for the day, I could go here, right click here, go custom, and select the day. Well, let's see if it will give me now, because we are now into midnight. Okay, so let me see if I can go the custom period and select Friday, which is the 24th to the 23rd to the 25th. Okay, so let's see if I will get that. And bam, it shows you what the result. Now, I want to talk to you. Because you see, at times, there are many persons who refuse to, let me just put the date, 23rd, 2nd, 2023, who refuse to show bad trades or show losing trades. We are not in that. We have no problem showing the trades that have been at last. So I want to pick up what the actual trade data would be for today. So for the trading session, we would have closed a 11,676 profit, but it doesn't mean all are winning trade. If you look, we lose $4,000 here, and the Japanese USD. We also lose another 3,000 here. We lose 1,999 here. Okay, so we have 1, 2, 3 last trades. These were winning trades, so the magnitude of our winnings exceed the magnitude of our loss. This will also show you the so you would have seen the leverage that we are using is the same. I think this was 100 to 1. Okay, you'd have noticed that you also pay commission, okay, and spread on these. So you have to be careful, because if you go in for a little penny, then each trade that you take quickly with profit could be a net loss. Okay. Let me go down to the open position now. Now you can see the open position, and just to count them, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29. These are 29 open trades. The US CAD, 3 open trades outside the money. Losing, floating losses. These are floating losses, okay? But we have some trades that work well, as I show you, and these are the result of them. These are open positions with various profit element there. The net result, though, we have a floating profit of 80,454 as we speak. Interestingly, there are some matrix that you get when you go report in MetaTrader 4. So this will show you that for today, it was 16 trades that closed. It gives us a profit factor of 2.28, which is pretty good. Okay. You'd have also see what the expected payoff would have been. You'll see that our percentage win, okay, was pretty high, and even though our average loss is greater than our average winning, the percentage will have given us an edge, and that's why we have a net profit of 11,676 for those that close. Okay, and you could look at the equity curve dip, come up nicely, and I'm sure that when the others chew. So we would have done pretty well based on where we were. So I can go full history then. Now I'm going to go full history, all history, and see what is status. The status is that we have a net 55,432. Let me go complete. Let me go and get the complete report then for this. Now this will show you the total history of this account. You would have noticed the 20 million here. Okay, so deposit 20 million, and you'll see that the account have rocky days. The first 2 trades was losing trades, and we start to win a little here. We come back here, and you have a period of losing trades here as well. See that a lot of trades have been executed. Net position 55,432, and you have seen the same open position here, but the equity curve now is different. You'll notice these swings, and these explain the volatile market that occur, but our recovery factor was still good. The profit factor of 1.62 for 206 traders have been closed. Not too comfortable with that, but with 206 trades, you have nothing much that you can do really. We need more data points, so we'll maintain it and monitor it for next week. Okay, so this will lead us to the end of this session. I think we'd have covered a lot. We have looked at the open position. We also could have a pictorial view of the equity curve. We will continue to monitor this strategy and to add additional lecture so that those persons who have access to the software and want to trade this strategy, they could adapt it. Okay, so that's the end of me for now. Bye-bye.